Good evening, everyone. Welcome to the 32nd episode of ICC Biz Live, our C-suite interaction for spreading knowledge. Today, we have with us Dr. Debesh Roy, an eminent economist and founder, chairman, and founder of Institute for Pioneering Research. Well, I would not. I'd rather let him introduce himself. He has a lot of achievements to his credit. Sir, so let's begin. I request to give you an introduction of yourself and your organization and the kind of work you do.
Good evening, Dr. Ghosh. Thank you very much for inviting me on ICC Biz Live. It's indeed a pleasure. At the outset, I would like to congratulate the Indian Chamber of Commerce on completing 100 glorious years as one of India's leading industry associations. I am Dr. Debesh Roy, Chairman of the Institute for Pioneering Insightful Research Pvt. Limited, INSPIRE, based in Greater Noida. I am an economist and development professional with a PhD in economics. I founded INSPIRE in 2021 with my daughter Bijitri Roy as a policy research and consultancy firm registered as a startup company. INSPIRE is dedicated to conducting cutting-edge policy research and consultancy services with a focus on economics and climate change. Our work spans areas such as macroeconomic policy, agriculture and food systems, banking, financial markets, and climate policy. INSPIRE aims to consistently produce credible knowledge through high-quality publications. We have published 2 books, India's Agriculture and Food Exports, Opportunities and Challenges. And the second book was Transition Towards Net Zero, Paving the Path for a Sustainable Future. Both were published by Bloomsbury. We publish a monthly journal, Ecosphere, which covers developments in the Indian and global economies, financial markets, and climate change. We also have been involved in conducting research studies in the areas of agriculture, financial inclusion, rural development. INSPIRE works closely with government organizations, academic institutions, and industry bodies, and is a proud member of the Indian Chamber of Commerce, with whom we have been associated as a co-sponsor of the National Sustainability Roundtable in 2024. We also signed an MOU with the Indian Institute of Finance to undertake joint research and leadership development programs for senior and top management in the corporate sector, banks, and financial institutions. We also have MOUs with the NABARD Consultancy Services, NABCONS, and Bankers Institute of Rural Development, BIRD, for collaboration in research and consultancy. Before starting INSPIRE, I spent 32 years at NABARD, working extensively on rural infrastructure finance, institutional development of regional rural banks and cooperatives, policy research in agriculture and rural finance, and sustainability. Briefly, this is about me and my organization. Thank you.
Excellent, sir. Now, I would like to inform that we bring out a quarterly journal on successful startups where we exhibit their success story. It is called Startuppreneur or Start Entrepreneur for merged together. So, post this the podcast is over, I would request you to share an article describing your organization, which we will bring out in our next version. That is one.
Sure.
Now, since I had gone through your books and you described yourself, you are more of a specialized in agriculture. So that is why our topic of discussion today is on agroeconomics. So my first question is, before you had chosen this topic of agro marketing reforms, but before we go into agro marketing reforms, this is from my personal experience. A minimum support price is one of the most fair pricing systems in the world. But yet there are multiple implementation issues. Apparently, it doesn't reach more than 15% of Indian farmers. And though it is mandated for 22 crops and sugarcane, but public procurement is not for all. Not for all. I mean, how do you analyze this statement? These are available on public domain.
Yes, actually, MSP is a scientifically designed and cost-based pricing mechanism. It's intended to protect farmers from price collapses. Its key limitation, however, lies in not in the design, but in limited procurement reach. Although MSP is announced for 22 crops and also FRP for sugarcane, procurement remains heavily concentrated in wheat and rice and in a few states like say Punjab, Haryana, and benefiting barely 15% of farmers. Smallholders, rain-fed regions, and producers of pulses, oilseeds, and horticulture largely remain outside its ambit. And even recently, and even you may see that the last few years, that pulses and oilseed prices they run below MSP. And to address this issue, Government of India has expanded MSP-backed interventions. And recently, they had introduced the rupees 11,444 crore mission for Atmanirbharta in pulses and strengthening of the PM Asha, that is mostly mainly for procurement of oilseeds and pulses. MSP thus remains a vital but incomplete income support tool, requiring wider coverage, better market integration, and complementary marketing reforms to function as an effective price assurance mechanism. So this is
Thank you, sir. Very well explained. Now, in this context, from you, what's one question which is coming to me is that farmer protection in terms of if a crop loss occurs due to adverse weather, is agro insurance working well? What do you think? Crop
Well,
insurance.
even although agri insurance, the scheme has been revised several times, and it is improving. It is now even tech-based. A lot of technology is being used for crop cutting experiments and all. So insurance, it has improved, but the thing is that there are still some shortcomings, and because the farmers are, they need to get the right compensation at the right time, and that is important. Otherwise, delays in getting the getting back the compensation is actually that's a problem. But still, things are improving with the use of technology, and probably further reforms are needed in the scheme on that
Okay,
issue.
sir. Now let's come to agriculture marketing reforms. And in this case, and what do APMC Act? What does the APMC Act play in India's agricultural marketing ecosystem? And what are the pluses and what are the benefits and what are the limitations of the APMC Mandi system?
Yes.
APMC Act and APMC Mandi system.
Yes. The APMC Acts have historically played a foundational role in India's agriculture marketing ecosystem, and they were introduced to protect farmers from exploitation, regulate agriculture trade within notified market areas, and ensure transparent price discovery and timely payments, particularly during periods of food scarcity and weak market institutions. By mandating sales through regulated mandis, licensing traders and commission agents, and levying market fees, APMCs helped curb distress. Sales brought a degree of order in the agriculture trade and facilitated the creation of basic market infrastructure. But over time, what happened was that the system has revealed structural limitations, restrictive market access, and mandate to sell only through APMC mandis have curtailed competition, while trader and commission agent cartelization has weakened genuine price discovery. High market fees, commissions, cess inflate transaction costs and reduce farmers' share in consumer prices. Inadequate infrastructure such as storage, grading, assaying facilities that leads to forced post-harvest losses and distress sales. The presence of multiple intermediaries adds inefficiencies without commensurate value to the farmers. And also, APMCs often suffer from conflicts of interest as market participants, as also act as regulators, undermining transparency and accountability. So, high entry barriers for new traders and limited geographical coverage of mandis discourage private investment and innovation, leaving farmers with low bargaining power, limited market choice, and persistently weak price realization. This is the problem.
So that that means what the intermediation is still playing an active role in our agro system.
Yes, very much.
Now, Now I would come to ENAM, ENAM and eChopal, ITC's eChopal. Have they helped for get farmers a better price, and have they helped integrate markets? You can treat as two different questions: ENAM separately and eChopal.
Okay. Uh, Now, to address the market distortions, the Electronic National Agriculture Market (ENAM) was introduced as flagship reform. ENAM is a pan-India electronic trading platform launched in 2016 to digitally integrate existing APMC mandis into a unified national market for agricultural commodities, advancing the vision of one nation, one market. Implemented by the Small Farmers Agribusiness Consortium under Ministry of Agriculture and Farmers Welfare, ENAM seeks to overcome market fragmentation by standardizing trading procedures, harmonizing quality norms, and enabling transparent competitive price discovery and online bidding. The platform offers single window services such as electronic registration of farmers and traders, commodity arrivals, quality assaying, e-bidding, and digital payment to farmers, thereby reducing information asymmetry and transaction delays. By expanding farmers' access to wider pool of buyers beyond local mandis and promoting quality-based pricing, ENAM aims to enhance market efficiency, improve further price realization, and ensure stable availability of quality produce for consumers, although its full potential depends on complementary investments in infrastructure, logistics, and farmer institutions. Now, regarding this ITC's e-Chopal, that has been an innovation which has been running for almost, I think, 20 years or so. And it is one of the first initiated by any private corporate sector in So it uses it organizes farmers similar to the FPOs, and they are provided with say a terminal, and then what happens is that it's kind of contract farming as well. While at the time of production, they are provided with all kinds of information, whether it relates to the weather, and uh, the soil conditions, etc., and then market conditions, as it is a kind of contract farming. So the quality of produce is also ensured. And so I think over the years around, it covers almost 7 or 8 states so far, and maybe uh, so it has been an efficient system which has benefited the farmers, and mostly in wheat cultivation and a few other crops. So it is one of the major interventions in the corporate sector, and it is something which needs to be replicated.
Thank you, sir. Coming back to ENAM, how what are the success points, and what do you think is has ENAM reached each and every farmer, or do you think some reforms are needed to make ENAM more farmer centric?
Yes, ENAM has made some important progress in integrating India's fragmented agri markets. Like it now links 1,522 mandis across 23 states and 4 union territories, covering 238 commodities with 18 million farmers, 4,500 FPOs, and 3.8 lakh traders registered. The platform has improved price transparency, enabled quality-based bidding through assaying, facilitated direct digital payments, and supported basic market infrastructure in mandis. However, the impact remains limited and uneven. With nearly 7,000 mandis nationwide, coverage is partial, and inter-mandi and interstate trade accounts for only about 1.35% transactions. So trade remains largely local due to restrictive state APMC laws, lack of license portability, logistics gaps, and weak dispute resolution. Even the farm gate trading module, operational in 11 states, has been limited. However, key shift is ENAM's integration with the Kisan credit card, which is helping evolve into a finance-enabled marketplace by enabling post-harvest credit, faster payments, and reduced distress sales, and stronger FPO-led aggregation. Going forward, ENAM must move beyond platform expansion to ecosystem integration, harmonizing APMC laws for interstate trade, integrating logistics and warehousing, creating a national dispute resolution system, and scaling market yards of national importance. The digital base is in place, but impact now depends on legal, financial, and institutional convergence. That's all. Hmm. Okay, that's uh, what I had to say about this. Dr. Ghosh. Yes, Dr. Ghosh. Yes, yes, Dr. Ghosh. Are you online?
Hello.
Hello? Yes.
Rajoshi's system is having some problem.
Oh,
So you may continue
okay, okay.
with your talk.
Okay. No, okay, okay, okay. So, so anybody is asking questions further? Or should I continue?
Sorry, sir. In the internet problem at our side. Let's come back. Come back.
Okay.
The question uh,
Yes. Yes.
we we could have lost some audience in this dropout. Any other question was what are the key achievements in NAM so far and what more
Okay.
is make NAM
Yes.
more farmer?
Yeah, actually, I've spoken already. Uh, should I say again?
Uh, uh, no,
Yeah.
you what reforms are needed in NAM? You can begin from there.
Yeah, yeah. Actually, recently there's been a positive shift like ENAM's integration with Kisan credit cards, which is helping evolve it into financial enabled marketplace by enabling post-harvest credit, faster payments, reduced distress sales, and stronger FPO-led aggregation. Going forward, ENAM must move beyond expansion to ecosystem integration, harmonizing APMC laws for state interstate trade, integrating logistics and warehousing, creating a national dispute resolution system, and scaling market yards of national importance. So the digital base is in place. Impact now depends on legal, financial, and institutional convergence. This is what I had to say. Yeah.
If I may ask you,
Yes, sir. Agriculture marketing reforms in India are needed to address fragmented, distortion-prone markets shaped by a restrictive APMC and Essential Commodities Act frameworks and a slow shift towards demand-driven agri-food systems. Small and marginal farmers who dominate Indian agriculture lack aggregation, market information, and alternative channels, resulting in weak bargaining power, distressed sales, low farmer share in consumer prices, high post-harvest losses, limited value addition, and weak private investments. Reforms such as warehouse-based marketing, electronic negotiable warehouse receipts, and platforms like Enam seek to improve price discovery, access, finance, and reduce distress sales, though their impact is constrained by infrastructure and capacity gaps. Cooperative successes like Amul in case of milk and Mahagrapes in case of horticulture products highlight the potential of collective action. While initiatives such as Model APMC Acts, private markets, and FPO promotion aim to integrate farmers into value chains, uneven state adoption has led to limited outcomes. The 2020 farm laws sought deeper reforms, but their repeal marked a setback, underscoring the unfinished agenda of agricultural market reforms. So, if I can continue, then It's when we talk about marketing reforms and its impact on discovery for farmers. Marketing reforms directly influence price discovery, but only when markets are genuinely competitive. Price discovery improves when farmers have holding capacity, access to multiple buyers, and quality based pricing mechanisms. Otherwise, even reformed markets fail to deliver higher income because farmers remain price takers and under distress conditions. Then there are the commodity exchanges like MCX and NCDEX, which complement these reforms by providing transparent, SEBI regulated platforms for price discovery and risk management through futures and options, helping farmers and FPOs manage price volatility. However, periodic bans and agri derivatives limit access to price signals, despite evidence suggesting that the link between futures trading and inflation. Talking about the FPOs and their role in price discovery, FPOs, farmer producer organizations, can play a pivotal role in price discovery, especially for small and marginal farmers who lack scale and bargaining power. By aggregating produce, FPOs reduce transaction costs, strengthen negotiation capacity, and enable direct engagement with processors, exporters, organized retailers, and digital platforms, making effective price discovery possible through collective action rather than individual participation. FPOs are also key to transforming subsistence farming into market oriented enterprises by providing end to end value chain linkages, including input procurement, aggregation, post harvest management, value addition, and marketing. This improves productivity, quality compliance, and price realization. Strong FPOs also enable quality-based and risk-adjusted price discovery by accessing futures and options markets such as MCX and NCDEX to hedge price risk and access forward price signals and export channels, including the agri-export zone linked, the SPS compliant supply chains, contract farming arrangements with export-oriented food processing units in food parks and units supported under the One District One Product scheme can deepen market linkages, boost processed food exports, and raise income of small farmers and fishers. The policy support is essential to unlock this potential. FPOs require adequate working capital, value chain financing, and innovative instruments such as social stock exchange to sustain operations and scale up market participation. Partnerships between FPOs and agri-tech startups would further enhance price discovery and market efficiency. Such collaborations could help address gaps in productivity, logistics, and market intelligence and finance. FPOs are indispensable to effective price discovery, not just by aggregating supply, but by professionalizing market participation, integrating finance and technology, and linking farmers to diversified and competitive demand centers. Now, I would also like to now talk about agricultural marketing reforms which encourage agri investments, whether they encourage agri investments. Agricultural marketing reforms are essential for encouraging agri investments, particularly in storage, logistics, processing, and value chains. Private investments in agriculture is highly sensitive to regulatory stability. Predictable market rules, freedom of movement, and transparent price discovery are prerequisites for long-term capital-intensive investments. Historically, restrictive APMC regulations, fragmented markets, and frequent interventions under the Essential Commodities Act created policy uncertainty, discouraging private participation. Marketing reforms could correct these distortions by expanding market access, enabling competition, and supporting alternative channels such as warehouse-based trading, digital platforms, and direct buyer-seller linkages. The Agriculture Infrastructure Fund plays a catalytic role by translating reforms into on-ground investments. Through investment subvention and credit guarantees, AIF lowers financing risks and costs, encouraging investment by FPOs, cooperatives, agripreneurs, and private sector in warehouses, cold chains, primary processing, and logistics. This infrastructure strengthens cold chains. This infrastructure strengthens price discovery, reduces post-harvest losses, and enables warehouse-based marketing and ENAM integration. However, financial incentives alone are not sufficient. The success of marketing reforms in crowding in private investment ultimately depends on regulatory credibility, stable and rules-based governance. Together, marketing reforms and AIF can create a virtuous cycle of higher investment, better market efficiency, and improved farmer incomes. Now, the question is whether private markets can coexist with APMCs. Now, private markets and APMCs can coexist and complement each other, creating a more competitive, efficient, and farmer-centric agricultural marketing system. The objective of reforms is not to dismantle APMCs, which have historically played an important role in providing regulated market access, but to modernize them and to place them within competitive ecosystem. Allowing private markets, direct procurement, processors, exporters, and digital platforms to operate alongside APMCs expands farmers' marketing options, improves price discovery, and reduces dependence on a single channel. Competition incentives incentivizes APMCs to upgrade infrastructure, improve transparency, rationalize fees, and adopt technologies such as e-auctioning and assaying. A plural marketing system where APMCs, private markets, warehouse-based trading, and digital platforms like ENAM coexist enhances efficiency, attracts private investments in logistics and value chains, and strengthens farmers' bargaining powers. Ultimately, coexistence ensures choice, competition, better price realization for farmers, while preserving the regulatory role of APMCs in safeguarding fair trade. Now, next the question relating to marketing reforms, whether they can address regional disparities in market development. Agricultural marketing reforms can meaningfully reduce regional disparities by integrating fragmented markets and enabling smoother interstate trade, allowing surplus regions to access deficit markets and improving price discovery across states by creating more predictable and competitive market conditions. Reforms can attract private investment in storage, logistics, processing, and cold chains in historically underserved regions, supported by instruments such as ENAM, warehouse-based marketing, and contract farming. Equally important is the role of FPO-led aggregation in backward and remote areas dominated by smallholders. Strong FPOs can aggregate produce, meet quality standards, and connect farmers to buyers beyond local mandis, thereby improving market access and incomes. However, these gains will materialize only if marketing reforms are accompanied by investments in physical infrastructure, digital connectivity, market intelligence, and extension services, along with credible, coexistent, credible and consistent state-level implementations. Now, whether farmers have really benefited from reforms till now and whether there is a need for a rethink. Farmers have seen some gains from marketing reforms, but the benefits have been uneven. States with stronger infrastructure, effective APMC reforms, and assured MSP procurement, mainly for wheat and rice, have delivered better prices and faster payments, benefiting larger farmers and well-linked FPOs. For most small and marginal farmers, especially in rain-fed and remote regions, the impact has been limited due to weak aggregation, poor storage and logistics, low digital access, and continued dependence on local traders. Perishable sectors remain vulnerable, and uneven state implementation and frequent policy interventions have reduced reform credibility. This experience underscores the need to rethink reforms by combining market liberalization with strong institutions, infrastructure, credit, risk management, and FPO support, ensuring a more farmer-centric and inclusive approach. Now, what should be the road ahead for agriculture marketing reforms in India? I must say that the road ahead lies in moving from episodic changes to a coherent farmer-centric market architecture. Market integration must go beyond physical mandis to create a genuinely national market through seamless interstate trade, harmonized APMC regulations, and stronger digital platforms like ENAM, backed by logistics, assaying, and dispute resolution systems. As agriculture is state subject, state ownership of reforms is essential, but the center also has a role to play under Entry 33 of the concurrent list of Constitution of India, which enables coordinated center-state action related to trade, production, supply, and distribution for food security and price stability and efficient national markets. The experience of the repealed 2020 farm laws highlights the need to revisit and such reforms through wider stakeholder consultation, co-creation, and respect for regional diversity. A permanent institutional mechanism such as the National Agriculture Council on the lines of the GST Council would help sustain dialogue and coordination. FPO-centric value chains must form the core of future reforms. Strong FPOs can aggregate produce, standardize quality, improve bargaining power, and link farmers to processors, exporters, organized retailers, and commodity exchanges. This requires sustained support for working capital, professional management, market intelligence, and partnerships with agri-tech firms and food processors. Reforms should also scale up warehouse-based marketing, electronic negotiable warehouse receipts, and commodity finance to reduce distress sales, alongside wider use of price risk management tools such as futures and options, especially through FPOs. MSP needs to be reimagined from a procurement-heavy system focused on a few crops and regions to a broader price assurance and income stabilization framework, complemented by market instruments, deficiency payment, and targeted safety nets. I must also mention the role of corporate sector. I've already mentioned about ITC's e-Chopal, which combines digital platforms with physical procurement, warehousing, and logistics to improve price discovery, reduce transaction costs, and strengthen farmers' bargaining power at scale. Ultimately, successful reform is not about dismantling existing institutions, but modernizing them to make markets more competitive, inclusive, and credible. This demands strong institutions at the state level, robust marketing boards, FPO federations, and digital infrastructure, and above all, rebuilding institutional and farmer trust, without which even well-disguised, well-designed reforms will struggle to deliver sustainable outcomes. Now, coming to technology-driven platforms, how they can transform farm-to-market linkages. Technology-driven platforms can significantly improve farm-to-market linkages by enhancing price discovery, reducing transaction costs, and expanding market access, but only when embedded with strong institutions. Digital marketplaces like ENAM and private platforms enable transparent, quality-based pricing, while FPO-linked digital tools strengthen aggregation and farmer bargaining power. Integration with logistics, digital warehousing, and ENWRs helps reduce post-harvest losses and allows farmers to time sales better. Fintech linkages through KCC, UPI, insurance, warehouse finance enable faster payments and reduce distressed sales. Technology also supports traceability and standards needed for organized retail and exports. Ultimately, digital platforms are transformative only when backed by infrastructure, institutional capacity, and financial integration rather than operating as standalone IT solutions. Now, finally, I must come to what indicators are needed to use the measure to measure the success of marketing reforms. The success of agricultural marketing reforms should be judged through outcome focused indicators like improved farmer value realization reflected in a higher share of consumer rupee and better farm gate prices, especially for smallholders and perishables. Market integration is another indicator seen in reduced inter-regional price dispersion, higher interstate trade, and closer alignment of wholesale and retail prices. Institutional inclusion matters as well, measured by stronger participation of FPOs and cooperatives and greater market access to small farmers. Reforms should also lower market stress, shown by fewer distress sales, wider use of storage and warehouse finance, and better price risk management. Finally, rising private investment in storage, logistics, processing, and digital platforms, particularly in lagging regions, signals confidence in the reformed marketing system. That's all I had to say. Thank you.
Those who are watching, please ask questions because Dr. Roy will not be available every day. So before questions come, I'd like you to also there's one person statement. I would he has appreciated your question statement very much. I'd like to ask you about FPO. How effective have they been? Apparently, they have been effective, but how? How much? What do you think? I mean,
Actually, there are some very good working FPOs which are doing well, and in terms of say processing activities, marketing, and even exports, there are some good FPOs which are doing it. And FPOs are needed. The fact of the matter is that since majority of the farmers are in the small and marginal categories, it's important that in order to build resilience, in order to have better bargaining power and be involved in the whole agri value chain, it is important that when the farmers come together as FPOs, they it's important to build their capacity. And in this regard, I must mention the role of NABARD, role of the SFSE. So they have been playing important role in not only helping promote these FPOs, but also in capacity building of these. Well, there's been the recent program of last 3 years, the Government of India's central sector scheme of uh, 10,000 FPOs, promoting 10,000 FPOs. Now, the scheme is over and already 10,000 FPOs, new FPOs have been formed. But now the thing is that with the number of farmers in the country, large number of farmers, so they need to be organized as FPOs and they need to function as, to promote uh, better to have better prices, to get better prices for their produce, and also to be involved in the complete value chain to so that the commodities are good enough to be not only sold in to have the best prices within the country but also sold abroad. And so there are a few FPOs which are doing well in this regard.
so my question is nowadays with e-commerce, Q-commerce, why do still so many intermediaries have a control over the Indian agro system?
Actually, the thing is that it's the system which has over the years there's been the middlemen, the Arathias, these commission agents. So they have been well entrenched actually within the system. So there is a need for removing all these layers. Then only the amount of the percentage of, say, a rupee which goes to the farmers, that should increase. And that will be possible only when the middle layers are removed. And that is why reforms are needed. Only when better reforms, where the farmers are able to, say, through this technology, say ENAM or any technology through which they are able to, sell their produce anywhere in the country. So,
The
and
question is on the
price discovery is possible only if it happens that way. But there's a need to remove these layers. So that's why reforms are needed.
can you repeat the question, Shomod, for sir? Yeah, please. Is agriculture a state subject, sir?
Yes, agriculture is a state subject. And I have also mentioned the role of government of India and the concurrent list I have mentioned here. That so although it is state subject, so obviously the reforms have to come from the state, but states have not been, forthcoming in this regard.
And another question. I don't know really. Forces exist which are not in favor of reforms. I mean, this is a controversial statement. Maybe we can discuss it offline, sir.
Mhm.
Next, another point is that warehousing has improved quite a lot compared to the earlier days, but still
Mhm.
we have to bear with some crop losses. Why? Why, sir? Earlier it was much bigger, but nowadays warehousing has improved compared.
Mhm. Yes. So losses are still actually as being. What is important is to it's a lack of since it's such a huge country. So there are places where warehouses may not be accessible, or some storage facilities. And there are those perishable commodities, especially where unless and until you have warehouses in the, say, the vicinity of the farms, the farm gates, and that is why this agriculture infrastructure fund, it allows creation of warehouses within, say, near the farms. So more and more warehouses need to be created so that the farms have easy access. What is important to have easy access to these warehouses so that there is the losses are completely, they are reduced drastically.
So, what do you think of NABARD's role in startups? They have a huge fund, and apparently such a big success. They are doing setting up another fund.
Number, yeah, it has actually, number has a subsidiary called I think it's called yeah, there is a subsidiary of NABARD which actually provides financing of these startups, but at a later stage. That is not the initial startups. The ones agri startups which are at a later stage, uh, they are financed by a subsidiary of NABARD.
Okay, that's quite natural. I mean, only those startups who have bigger whose inflow is bigger than the outflow, at least the positive, you choose to fund that. That's quite natural instead of funding a startup which burns cash. Now, on coming back
Yeah,
to
so I mentioned about NABARD's subsidiary. It's called NAB Ventures. NAB Ventures, the subsidiary of NABARD, which does it. Yeah. Okay, please carry on.
no, so now I'll come to the last question. To sum up, our original topic was agro marketing reforms.
Mhm.
After all our discussion, can you sum up the reforms which are needed in some points?
Hmm. Yes, actually, first of all, there's a need for the APMC reforms, and there's a need to, as you know, the farm laws which were introduced, the three farm laws. I think there's a need to revisit and reintroduce those laws because they were very forward-looking in the sense that farmers would have been able to sell their produce anywhere in the country, and also contract farming would have been allowed. And so what is important is that the farmers should be able to discover the prices easily through technology. Through then there should not be any restriction of say selling only to the APMC markets. So they can and only in the local APMC markets. So they can sell their produce wherever they get the best prices across the country. So that is the major thing which is needed, and that is why what is important is that now, since the three laws were repealed, there needs to be another coordinated approach where both the center as well as the states as well as the other stakeholders must come together, and then states need to enact their own laws, and the center whatever laws they had enacted. So that ultimately the whole ecosystem which needs to be created, the whole architecture that needs to be created for a successful, agri reforms where farmers actually benefit. What is ultimately important is benefit of the farmers, and for to enhance their earnings. So that is possible only when there are real reforms, and which has actually not happened the way it has happened in other sectors. So that is what is needed, and it should be more technology based, and where price discovery that is important, which is possible, and also these commodity exchanges. They also have a very important role to play. So these are some important things which are needed.
Sir, there private e-commerce sites, without taking any names, don't they help farmers without taking any names?
Yes. Yeah, I couldn't get you.
Private e-commerce sites, which we in cities regularly
Yes, yes. Yeah, yeah.
purchase. Don't they help the farmers?
Yeah,
And
there are, yes, yes,
I mean,
there are,
ICC e-Chopal is a huge success
yeah,
story, but other than that,
yes.
there's no other
Other than
private
that, also, there are some actually startups which are doing it. They are doing it. They're through, they are using technology, and through e-commerce, they are getting the produce from farmers directly and selling in the market. So it is happening. Some startups are involved in it. I won't take names, but they are doing. So, but what is needed is, of course, these are happening in limited scale. So there's a need to expand.
I understand, sir. Now, before we sign, any more questions, audience? Okay, no question as of now, sir. So, sir, thank you very much. We will end the conversation today and share you the recording later. But also, at the same time, we want an article from you on your organization, and we will look. I mean, publish it in our journal on Startup India. I'll
Thank you.
send you the official request on Monday.
Thank you. Thank you very
And
much. Thank you.
the policy work, we will your discussion revealed a lot. I mean, but offline we will discuss. Let's see what we can do on the
Sure.
policy front.
Sure. Thank you.
Thank you,
Thank
sir.
you. Thank you.